Good afternoon. Welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Meghan. With us is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right. So you might notice that I'm not in my normal office. We're talking at a different time than normal. I've had a few travel hiccups trying to get back home. So we are wedging this in an airport in Houston, Texas, in between my flights. So I appreciate you obviously being flexible. And for those who watch us weekly, and we normally we'll talk a little bit of market and what's been going on, but make sure you check out the newsletter this week for all the details on that, because we'll have slaughter numbers and market information. So now that that's out of the way, let's talk a little bit about some of the trends that we saw this week in the markets.
Yeah, if we look at what's been happening on the future side, Megan, this week, on the cattle side, those April live cattle futures closed Thursday up 285 from last Friday's close. The March feeder cattle contract was up nearly $2.40 through Thursday relative to last Friday. While on the hog side, we're talking about lean hog futures contracts that were down about 60 cents from Friday to this Thursday's close. It gives us a little indication of where markets have been going. We do have some information on the meat side of the equation. Choice box beef prices, those were down about $3 this week. That now puts them nearly $18 below where they were a year ago. And on the pork cutout side, we saw basically unchanged on the pork cutout value. It's about $15.50 below where it was a year ago.
Really interesting, I think, looking at what's been happening this week in the markets. And obviously we will have more details on that later. But the response to the cattle inventory report, was exponentially different than what I thought it would be Wednesday morning after we saw the report come out on Tuesday.
Yes. So I think it's important to remind ourselves that what's going to happen today versus what's going to happen in 12 months are different things here. I was a little surprised we didn't get some more positives out of some of the very deferred contracts out there. But when you look at, although we don't have slaughter numbers as you and I talk right now, looks like to me we're going to be not that different than where we were a week ago in terms of cattle slaughter, higher than where we were a year ago in cattle slaughter for this week. So I think we have to remind ourselves we're just starting to jump off the diving board that might get us much tighter supplies over the coming months.
And I've been in New Orleans this week at Cattle Industries convention, and that's been kind of the theme of everything as tighter supplies are coming. There's a lot of risk management conversations that have had to happen or will have to happen. And we'll talk a little bit more about that when we get to the cattle inventory report. Let's talk restaurant performance first, and we'll talk jobs, both really pretty positive reports this week.
Yeah, so we continue to see a stronger restaurant performance index. That December index was up 0.7% relative to where it was in November. When you start looking at the individual components here, so first of all, the current situation index was stronger as well this month. Same store sales up nearly 0.9%. And on top of the current expectations being higher, we're also seeing that expectations component, so what folks think for the next 6 months, also being stronger as well. So good news, I think, on that front as we continue to hope for stronger demand.
All right, let's talk jobs. As we take a look at those numbers, it's a pretty big jobs number this week.
Yeah, hold on to your hat, right? So I think a lot of pre-report expectations were centered on what was the Fed slowing the economy that would hopefully slow down job creation. But instead, we added 517 jobs, according to the report this morning for December. That made the unemployment rate drop to 3.4%, the lowest in more than 50 years, Megan, is where we're at. So we got a strong jobs report now. We take this. Stock market was off hard here to begin with. I think it's tried to come back. I don't know where it sits right now. So a little bit of back and forth or volatility. because we're going to have this tug of war of, do we have inflation under control? Do we not have it under control? And if we don't, and the Fed continues to raise interest rates, that's a drag on the economy. Yet when you add 517,000 new jobs, that's probably some short-term help for additional demand for meat products in this country.
So when we look at an unemployment rate that's sitting at 3.4%, we're adding 517,000 jobs. At some point, do we have enough people looking for work to fill those jobs? And what does that do for wages? And you mentioned it's obviously good for demand, but meat demand, if we're seeing higher wages, how does that kind of play out in the overall economic picture?
Well, I think you're wise to talk about it, because we're likely going to be pushing wage rates even higher. Now you look at what we got out of the report in terms of wage rates; they were 0.3%, an increase, and that's 4.4% above where they were a year ago. So we got pretty much what we anticipated in terms of wage rate increases out of that December set of numbers. Yet when we're this tight in terms of unemployment rate of 3.4%, if I'm going to go fill new jobs, I'm likely competing, trying to pull people away from other jobs, and I do that by paying them more. So there could certainly be some wage inflation, higher wage rates coming as we look ahead here, Megan.
All right. As we wrap up today, just a teeny tiny little report that came out earlier in the week. Cattle inventory numbers came out, and I had one economist this week tell me that it was the most anticipated report he's been waiting for months. And now seeing the numbers that came out this week, now he can't wait for July to get here, because now he's got to see what the July numbers are. So I think let's talk first a little bit about beef cow inventory, because it's not great.
Yeah, that's correct. So I always like to start by, I don't like that we may be talking about record prices because we have less supply. But that's kind of what we're continuing to set up. I'll say in general, the report to me was as we expected, in terms of just fewer numbers. It confirms what's getting ready to happen. When you see that beef cow inventory below 29 million head of beef cows, lowest since 1962, it just reminds me to say we've got fewer animals coming through the system. It's going to get tougher for those that need to either buy feeder animals or slaughter ready cattle to have the same supplies that they've been used to the last few years. You look at the supplies outside of feed lots, so available feeder cattle supplies, they're also down about 1 million head, as I recall, out of the report. And so I think all of that just tells me we're going to get tighter as we look ahead.
Talk to me a little bit about, we talk about beef cow numbers, we talk about heifers. How does that set us up long term? Does that show that we're not necessarily slowing contraction as much as we should or we would be?
Yeah, so I think when you look at those heifers kept for beef replacements, beef cow replacements, we were down almost 6%. That's pretty tight, Megan, and tells me we're not really doing anything yet to grow the overall herd back. And sometimes said it may take a while. It's going to depend on weather. It's going to depend on profitability. Both those things are going to be needed, I think, to get us to turn around too quickly this time.
So you said that the report was pretty much as you expected going into it, but I wouldn't say that it didn't come without some surprises, maybe?
Yeah, for sure. A few things, I'll say jumped out. So Missouri jumped out to me. My windshield certainly didn't call for Missouri to be flat, actually up 4,000 head in terms of beef cow inventory. I would have thought it was going to be down. I was a little surprised that we didn't see Texas down harder, given how dry it was there last year. So they were down 125,000 head. When you look back at the at the 2012 drought period, they were losing 250, 300,000 head of cows a year. So that was a little smaller than I anticipated. The other one to me that jumped out was frankly Kentucky, down 71,000 head. So some dry weather, but I'm not as dry as we saw in Nebraska, Kansas, Oklahoma, Texas. And so that one jumped out at me a little bit as well.
Any other takeaways from the report on your end?
Well, I think when you look at again, cow inventories for a minute, I like to remind everyone that, it was a few states that really drove what happened. So when you look at the last 2 years, so from kind of January of 2021 to January of this year, so Kansas, Oklahoma, Nebraska, Montana, North Dakota, South Dakota, those 6 states lost more beef cows than the rest of the country combined, which is saying a lot when you don't put Texas in that because everything's always bigger in Texas. But the fact those 6 states it tells you the drought has had a big impact on how we've lost beef cows. Now, I will say, I think it's going to be weather going forward and profitability that's going to matter in growing the herd back, by the way.
So if you follow us on social media at all, you probably saw some of my tweets from the cattle facts session yesterday morning. The end of a La Nina and a gradual transition to an El Nino weather pattern, and Matt Megan's really kind of set us up for what looks to be some promise and some potential to put some grass back in some of those heavily grazed areas. Does that, obviously, I would assume, give some optimism to producers, right? But maybe in some places speed up expansion or at least retention and slow the contraction?
Yeah. So I sometimes will say, once a cattle producer realizes they have extra grass, what do? They find a way to graze it some way. All right. So let's not forget that that incentive is there. Now, I think it's different in terms of, you got to have overall profitability to go along with that grass to get too excited. But I would just say, don't forget, we can turn quicker than maybe some of us might suggest is going to happen out of this next cycle. I say that just reminding us that, maybe I want to do a little risk management, longer term risk management. In this case, just in case the supply side turns quicker than we think. Now, I will remind us, if it does, we're going to even create a bigger production hole in the short term. So more positive even. You start holding those heifers back instead of putting them in the feed yard, all of a sudden that hole of production will grow.
I think the other thing to remember on that is too, right? Like, that's very supportive to beef prices as long as demand stays. But with competition and heavier supplies of pork and poultry, how much more competition is beef going to see in the retail space?
So it's there. For me, it's been tough. For much of the time, we haven't seen that much substitution away from beef, but we are going to talk about higher prices. We could get some larger substitution trying to happen as we look ahead. I think that's the unknown, and especially if the economy slows and consumer dollars don't stretch, we could see consumers trying to find ways to make those dollars go a little bit further, and maybe that's less beef at these high prices that might happen.
Scott, I think that'll do it for us this week. As we look ahead to next week, what reports are we looking ahead to?
Yeah, so we get a lot of information out next week. Meghan, we got farm income from USDA coming out early next week. Give us a little bit of look at what expectations are for this year. We also get WASDE this week, as well as monthly trade data, and finish the week with consumer sentiment.
There will be plenty to chat about next Friday in the comfort of my own home.
Travel safely the rest of the way.
Yes, I will see Missouri hopefully yet this evening.
Very good.
So for Weekly Livestock Market Update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments there. And for a daily rundown of what happened in the commodity markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grabner for Brownfield.